before this mega mania really gets going and before it ends, that'll be the case. You'll have average Joe Yuppie buying cases of silver and going to websites and doing what we've been doing for a decade plus.
Welcome to Silver Pros, sponsored by SD Bullion. I'm your host, Yankee Stacking, and I'm joined by my spry and sassy co-host, Silver Dragons.
What up, sassy? Okay, yeah, I'll take it.
I thought you would. Hey, today we're going to talk about silver's huge upside on the Fed's failures.
Interesting. And you know what? We actually do have a special guest with us today as well. His name is James Anderson.
Yes, James is the former managing director of goldsilver.com. He is currently in charge of the content marketing for SD Bullion. This guy is a real silver pro. Hi, James. How you doing?
Good, guys. Thanks for having me back. Appreciate being back on Silver Pros channel.
James, the Federal Reserve, as you know, raised their funds rate, but they've totally failed to return us to 2% inflation. Will we ever see that target reached?
I mean, you could, theoretically you could, if you have some type of deflationary, real problem like we saw in 2008 or briefly in 2020. You could have a situation where you could have big bankruptcies in banks and other financial institutions where you could have a situation where inflation does go back toward that number. But ultimately what that's going to signal is that the Fed is going to have to come back in and do its standard operating procedure, which is creating currency out of thin air and handing it out to, bailing out everything. So ultimately that will be inflationary in the longer term. I mean, it's a little different this time in the sense that fiscally, the U.S. government continues to run trillions in deficits year on year, and it really seems like it's not slowing. And that's really what seems to be keeping the inflation so persistent, because the amount of currency that's being loaned out by banks has kind of died off with the interest rates as high as they are. So this is really a question about, how much the government's spending and the fact that they're just taking up more and more market share in terms of the economy in general and spending. And so, are they going to slow down? I don't think so. And ultimately, I think the long-term game of this whole thing is to inflate away the currency. That always seems to be the route we're going to go. And one way or another, that seems where we're headed.
Is this the last Federal Reserve hike this year, or will we see another one?
Another 25 basis point hike wouldn't surprise me. But by the end of the year, you could see a situation where the market turns and they have to pivot and go back the other way and start cutting. And so will that happen by the end of the year, or will that happen next year? That's a big question that no one really knows. But it's going to happen, I believe. I mean, ultimately, the one thing he said that really kind of floored me was the fact that the Federal Reserve staff now thinks the consensus is that there'll be no recession. And that's pretty amazing to say that, given how high it jacked up interest rates of late and just how many bankruptcies are already happening in the corporate, and how indebted the corporate world is after this huge free money junkie paradise that we've been living in for the last 3 years. And all the amount of accounting standards that have been thrown out the window really over the last dozen years. The idea that there won't be a recession is pretty amazing that he said that. That was, to me, the craziest thing I heard come out of his mouth.
If we did have a recession, though, what would the impact be on physical silver? What do you think?
Yeah, that's a good question. I don't necessarily think that you could have a situation maybe that's akin to 2008 or 2020 where spot starts going down. What you're going to see again is bullion, the prices for physical bullion inventories that are available ready for delivery are going to stay elevated. So basically what you end up seeing is that demand comes flying through the door, and every dealer in their right mind keeps their prices elevated because they know if they sell at lower prices, they're not going to be able to replenish. And that's always the worry and concern. Be a bullion dealer, not to have any inventory, and you're more or less out of business.
Mm-hmm. Powell sounded almost paranoid about stopping rate hikes too soon. James, we have almost $33 trillion in U.S. national debt. How can we sustain high rates without breaking something?
Right. Ultimately, you look at the amount of interest they have to pay on the debt. It seems to be crowding out a lot of the money that we're spending in terms of percentage basis keeps growing. So the one thing that's helped us obviously is the fact that we're still the dominant reserve currency in the world, and we can press a keyboard a bunch of times and pay things. But ultimately the world's changing. I think maybe not this August like everyone's talking about with the breaks. It's not going to happen overnight, perhaps. But in the next dozen years or so, with the technology that's coming along, with the BIS, the Bank for International Settlements, working with various countries around the world so they can subvert dollar demand with their MCBDC payment settlement systems that basically allows countries to internationally and big banks internationally to settle trade without dollar demand in between. Dollar's always been the intermediary in major trading in the world, and if that goes away, there goes a huge amount of it's a huge peg that keeps the dollar as heavily that buys as much as it does at this moment in time. And so it's going to be painful for us to get paid in dollars because our salary just won't go as far, and hopefully you saved a lot for those rainy years that are coming. So I think that's ultimately what we're going to have. We're going to have a situation where it'll be labor versus capital, fighting constantly about their wages not reaching the end, and ultimately when you look at history, inflation always outpaces people's wages, and so it creates a situation that's corrosive in the society. And so if you think things are a little bit troubling right now, the way people treat one another, it'll be worse in the next 5, 10, 20 years. I think we're going to go through a major inflation with our currency, and so that's why I think you're going to, ultimately, that's why they're going to move toward a UBI and a CBDC system, because they need to soften the blow. Otherwise, you're going to have a lot of problems in the streets.
I want to get your take on the banks. Obviously, we had a few banks fail. At the end of the first quarter this year, Bank of America had over $100 billion in unrealized losses. Chase and Wells Fargo had about $40 billion. Do you think they make it out of this okay, or are we going to see more banks go down? What's your opinion on that?
A lot of those banks, on a mark-to-market basis, if you actually did real accounting, a lot of them are not solvent. I think the ultimate worry is one of the mega banks failing. Like you mentioned, Bank of America or Citibank. I think before this is all said and done, you're going to have one of them ultimately fail, and so that'll probably be toward the end of the entire financial crisis, and as we move into a new system, more or less, you're going to have to go through some pain. And I think ultimately that pain comes through with some of these mega banks folding and or being gobbled up by other ones.
What's the upside with silver?
So silver will tend to underperform gold in a recession. Gold typically will outperform in a recession. So that's what I would expect. I would expect gold to make the move first, and then silver eventually to follow and outperform. And that's ultimately the way this will probably play out. I mean, gold is it's trading pretty well. It's close. It's not that far away from its all-time record high. It's only $100 or so from it. And look around the world, the gold price is at record highs in a lot of places, and the dollar is not that far away from record high. And so you're just waiting more or less for the fiat Federal Reserve to pivot and start cutting, and that's when you'll have the next leg of this bull market. And 2000 will not become the ceiling; it'll become the floor.
Wow.
And that's the case that we're looking at.
Gold might lead, but silver has that upside potential, and now's the buying opportunity, not when it takes off. So yeah, that's a good point.
The other thing to remember, this is very conservative, is that the S&P 500 is like 4,500 right now, and this is a nice bear market rally for the stock market, obviously, and a lot of it's pinned on artificial intelligence hype, and that stuff is obviously going to change the world a lot, but I don't think it's happening tomorrow, and so that'll probably fade away as we realize that now we're probably moving into a recession, and that corporates aren't as profitable as they are, and they're actually in record debt levels, and so they're going to have a lot more bankruptcies. But if you look at the S&P 500, it's 4,500, and the S&P 500, when you divide it by gold on like a 100-year chart, like half the time in the last century, gold has been more expensive than the S&P 500, and gold is just under 2,000. S&P 500 is at 4,500. Go back and look at 2011; it was at 0.7. So gold was much stronger than the S&P 500 in 2011. And if you just kind of look at the chart, it screams a dead cat bounce. Yeah. And so ultimately, if gold is going to go back to the S&P 500, I mean, obviously silver is going to do well, at the same time. I mean, gold will perform extremely well versus stocks, and silver ultimately will do the catch up, and you'll have a gold silver ratio that floats floats back towards 60, and then back ultimately toward the 2011 low of 33. So that's more or less where this all goes. It's kind of gold leads and drives, and then silver follows as the rest of the population drives into it. So that's already happening in the United States, but it's kind of undercover. I still don't think you don't have the mainstream yuppie going to SD Bullion to buy a case of silver. But ultimately, before this mega mania really gets going and before it ends, that'll be the case. You'll have average Joe yuppie buying cases of silver and going to websites and doing what we've been doing for a decade plus.
Yeah, it's interesting. We talk about now being a good buying opportunity. Obviously, Yankee and myself were buying silver. But I want to talk about retail demand because we saw a really strong spring. There was like record sales, etc. What about this summer? What are we looking at right now as far as just demand for physical silver?
It's slowed down a bunch since June, and you can see a lot of the slowdown in the cutting of premiums. Dealers are obviously trying to cut premiums to get inventory moving and to get volumes sold. So yeah, it slowed down in the last 2 months. But like you mentioned, the spring was the most selling of bullion that's happened in the retail United States in March and April because of the banks, and it really. That could come back in the fall. I'm not sure exactly what it will be, but there'll be something I'm sure in the fall that will cause, worry and concern, and that may be the thing that ends up causing the pivot in the Federal Reserve to start cutting rates. Once that starts happening, you'll see a real move, I think, in gold, and eventually silver will follow. Germany typically is one of the largest markets in Europe. They buy a lot of gold and they buy a good amount of silver, and they bought a lot of silver when their VATs for coins was at 7% for a long time, but this past year, that exclusion of coins being only 7% VAT moving to 19% occurred in 2023, and that drove away a lot of buyers. And so you've had a drop in terms of European physical silver bullion demand. But the other side of the equation, obviously, is the fact that the United States continues to buy heavily. The retail and wholesale markets are pretty strong. And then you have the solar demand that's coming out of China that's been extremely high, and the amount of solar that they've been buying it's amazing. Like, I think their entire year, this year, they'll put enough solar panels in 1 year that'll be more than all of North America combined. So, I mean, that causes a situation where I now have to keep an eye on the Shanghai Futures Exchange and see how much silver is going and moving out of that exchange, because it seems like every month there's a lot of silver that's turning over there, and most of it is all going into their industrial demand, generally into solar panels.
James, you have a fantastic series of videos on SD Bullion. I watch them every time they drop. And you were talking about ETFs. You don't really have a lot of love for silver and gold ETFs. And you shared an interesting chart about JP Morgan. And when I looked at this bullion wait list that you had shown both in London and New York, it seems sizable. A lot of ounces in the vaults backing their iShares Silver Trust. It's all good, right, James? I mean, this looks good.
Yeah, JP Morgan is a nefarious bank, and they break a lot of laws. If you look at their rap sheet since the 2008 global financial crisis, they paid billions and billions of dollars of fines. I mean, the fact that they, more or less are paying pennies on the dollars that they're making, it's a sad state of affairs in terms of, the way that our economy works and the way that our markets work. But, the fact that JP Morgan is the custodian of the largest silver ETF is a problem. That means that if you're involved with that, that's who you're trusting. That's your counterparty. And if you think JP Morgan has your back, then you might want to think again. And then on the other side, the gold side, they got involved with the largest ETF, and now they're they have the majority custodian of the supposed gold that backs the GLD, which is the largest ETF for gold in the world. And so they've got their fingers in a lot of pies. And, if you own a share in either of those or in most ETFs, you're just an unsecured creditor. You don't actually own any bullion. All you do is own price risk. And so ultimately, it's okay if you're using it as a side bet, maybe for short-termism, but I would not put my safe haven funds with JP Morgan and be an unsecured creditor and think that that's silver or that's gold. It's technically not, and if you read the legal terms and agreements, you'll see that it could disappear and you would get nothing.
You mentioned many times if you can't hold it, you simply don't own it, right? And recently there was a survey that came out. I talked about it on my last video. One of the lower predictions, $21 for the end of the year. On the higher side, around $50. The average seemed to be about $31. I'm not going to ask you necessarily your prediction if you don't want to say it, but what are your thoughts on silver price for the rest of the year?
Yeah, so it's a question of obviously of how things go in the fall and whether or not the Federal Reserve has to cut rates before the year end, or whether or not it looks like the market's looking ahead saying they're going to have to. If they are, you're going to see people on the COMEX front run it and to look for a scalp. You're going to see a lot of longs going on the COMEX. And my expectation is, the base case I would have is that silver would run toward 30 in that case before the year end. And so whether it gets up to 28 and then bounces and doesn't get beyond 30, I would expect that's probably the case. That it wouldn't get beyond 30 this year, it would have a run, but not get there beyond it. I think 30 is it's a high watermark. Once you get silver beyond 30, it could run to 40 very quickly. And so, whether or not the authorities allow silver to get beyond 30 or whether or not they're slamming it constantly to try and keep it below 30, there's a question for, I don't think anybody knows, but that's coming. I mean, we've been consolidating sideways for the last 3 years. And the longer the sideways consolidation that we have, the longer the ultimate rip is going to be when the time comes. And that will help carry us for years in a bull market that probably leads to a mania phase where the price goes exponential before it's just, all said and done.
James, thank you so much for joining us. And for everyone watching, let us know in the comments if you think the Fed's failure means huge upside for silver. And we'll see you next time on Silver Pros.
Stack like a pro.